I'm the Executive Director of Art Services Initiative in Western New York, and we're happy to host this tonight. It's the first of our 2016 professional development series. And before we get into tonight's topic, I just want to let you know a couple of things coming up in our series. It's in the basement. That's all right, Mary's giving directions to someone, so that's okay. Anyway, so as ASI this year actually is turning 5, we decided one of the ways we wanted to celebrate was to really up what we're doing with one of our core services, professional development. And you're going to see good peer-to-peer and local expert learning continue, such as tonight. But we're also going to be bringing in more statewide and national level speakers and trainers as well. Next month, February 9th, on Mardi Gras Day, we're going to be having the New York State Council on the Arts come to town. We've done that in the past, and usually the director comes to town. This time we've got a rolling road show of 7 program officers and vice presidents from the New York State Council on the Arts. They're going to be talking about all of the different kinds of money that's available through the council. So whether it's presenting or dance or special art services, state and local partnerships, just a list of them. That's going to happen from noon to 3. We're finalizing the location on that because they need multiple breakout spaces and such. So if you're not yet on our Facebook page, ASI's, or on our email, get on there and you'll know as soon as we have the location finalized. But even if you get NISCA funding already, it's worth coming to this. Whether it be for your own organization or for those you serve, if you're an art society. There's a lot of individual artist money, there's a lot of non-traditional opportunities, everything from architecture and design to folk arts. And so it's really worth coming, and not to mention you'll get to meet the people on the other end of the phone and the other end of the email string that you would normally have to go to New York City to talk with. In March we're bringing in the National Arts Marketing Project on March 14th. That's a national group affiliated with Americans for the Arts. It's going to be a day-long session on marketing for cultural organizations. Everything from non-traditional forms of marketing, translating your marketing materials to attract new audiences, online and social media. And then we're going to continue beyond that in April with the Arts Business Institute with individual artist marketing training. And we're going to just keep going. And in August, we're going to have Bob Lynch, the head of Americans for the Arts, come to Buffalo for a day with business leaders, cultural leaders, government, media, to celebrate our 5th year and also to talk about all of the different ways the arts impact our society and our community. So again, all of that will be on our Facebook page, our website, our email. So definitely take a look at that. And all of those sessions, as is everything ASI does, is free and open to the public. So we provide all of those sessions at no cost for our culturals. Thanks to our sponsors, Fund for the Arts, New York State Council on the Arts, and Erie County. Also, we have our Spark nominations open, so if you're a cultural organization, individual artist, or you want to nominate a particular business or supporter or advocate for your organization, go to our website. We'll have our cultural awards on May 24th. And even though it's a fundraiser for us, we like to make sure that even at our fundraisers, we're honoring the best in Western New York arts and culture. And then the last thing, if you're a cultural organization in Erie or Niagara counties, through our partners, the Greater Buffalo Cultural Alliance, we have a new employee pass. If you haven't heard about that yet, that's both on the ASI website and the Greater Buffalo Cultural Alliance website. All we ask is that your organization provide some sort of discount for other cultural workers, and in return, your employees will get a discount at all of those other culturals. It's just a way to sort of foster a cultural community within the workforce of nonprofit cultural. So all of that good stuff is out there, but none of that is why you are here today. Today you're here to hear the very exciting but also very necessary topic about labor laws. And here to speak on that, we have Mark Moldenhauer. Mark counsels employers on a wide range of matters affecting the workplace, including wage and hour compliance, medical leaves of absence, discrimination, harassment, and retaliation. He litigates employment-related cases in federal and state courts, represents employers and management before various governmental administrative agencies, and also provides EEO training, policy review, and assistance with all types of personnel-related issues. He's a member of Bond, Schoeneck, and King Attorneys. He has experience representing management in traditional labor law matters, including arbitrations, collective bargaining, and union organizing campaigns. And he was listed in the 2015 edition of New York Super Lawyers in the category of labor and employment. So we brought someone who knows what he's talking about to talk with you about some very important issues for your organizations. So please help me welcome Mark.
Thank you. This brings me back a little bit to high school drama class. I don't know, just walking in this room. Hopefully I don't slip into a little bit of Alice in Wonderland. Not that I knew my lines back then either. But exciting, labor law. Two words that aren't often used in the same sentence, particularly when you're talking about some of the topics that I'm going over tonight. I want to try to keep this a little bit free form. If you have any questions as we go, please raise your hand. I'll try to address them as we move along. So I'm sure everybody's here because they have some interest in the topic, Department of Labor vice grip, okay? Tough time to be an employer, okay? And really it has been a challenging few years for employers. There's been a lot of activity among the administrative agencies, whether you're talking about the National Labor Relations Board, which is really overturning 30 years of precedent in some instances and kind of redefining certain standards that apply, something even as basic as what constitutes an employer, to the Equal Employment Opportunity Commission. Even though there really haven't been any statutory changes on the administrative level, the agency's really been changing the rules that employers have to abide by. But really what we're going to talk about today are the Department of Labors. That is the U.S. Department of Labor and the State Department of Labor. And we're going to cover two topics with each. Just about the entire presentation, we're going to spend talking about the proposed white-collar exemption regulations that are affecting employers. Okay, this is on the federal side. We'll spend a little bit of time after that talking about independent contractor misclassifications, and then we'll talk about a couple issues on the state side. The proposed wage payment regulations, and then finally, a little bit what's going on with minimum wage changes. You've probably heard that there's been some pretty dramatic changes with respect to certain industries in the state and the minimum wage. So why is this all happening? And a lot of it ties back to political issues. Okay, President Obama, 2013, noted the dangerous and growing inequality and lack of upward mobility that's really affecting middle-class America. His feeling is that the basic bargain that if you work hard, you have a chance to get ahead, is kind of falling aside for a lot of people. He considers this the defining challenge of our time. So really, putting aside politics, this is something that is very high on the president's agenda. Mario Cuomo has issued similar statements over the last couple of years. This is something that's front and center as far as our government's concerned. And perhaps the granddaddy of all laws affecting the workplace when it comes to wage and hour issues is the Fair Labor Standards Act. Okay, we'll talk a little bit about that. The Fair Labor Standards Act, that's the basic law. It has two requirements. Okay, it requires that people receive minimum wage for the hours that they work, and that for any hours above 40 in a week, individuals would receive overtime pay. Okay, usually time and a half. There's a number of exemptions, though, that apply when you're talking about the Fair Labor Standards Act. And it's not that they swallow the rule, far from it, but they are important and they affect a lot of employees. Okay? And under the exemptions, overtime need not be paid to certain people who work more than 40 hours a week if they are executive, administrative, or professional. And those three exemptions together are often referred to as the white-collar exemptions. There's other exemptions out there. There's salesperson exemptions, there's computer professional exemptions, but the white-collar exemptions are the most common that are relied on by employers when they're trying to show that somebody is an exempt employee and that there's no obligation to pay overtime for more than 40 hours worked in a week. And just again, a little bit, I don't want to dive down too deeply into some of the legalese, but there's three tests to satisfy the white-collar exemption, regardless of which one of the three exemptions you're talking about. There's a salary basis test, the salary level test, and then the duties test. Okay, and then there's also a shortcut test that applies. And under the shortcut test, So if somebody's a highly compensated employee, you really don't have to even look at the duties test or the salary basis test. It's lack of emphasis on the duties test because the government's saying if you're paying this person so much anyways, more likely than not they're going to be considered exempt. Okay. A little bit because this is, everybody here is a not-for-profit agency, I take it. There's special rules for not-for-profits. That said, the Department of Labor has gone on record as saying that most employees of nonprofits are entitled to minimum wage and overtime protections under the Fair Labor Standards Act, okay? Unless they can meet the white-collar exemptions or some of the other exemptions that are out there. But not-for-profits as a whole are not excluded from the Fair Labor Standards Act. Okay? There's two bases for employees to be covered, employees of not-for-profit agencies. First is the enterprise coverage, second is individual coverage. I'll talk a little bit about those, just because, if this is not something that you deal a lot with, you might be wondering whether or not your organization might even be covered by the Fair Labor Standards Act as well. Also, keep in mind that there are certain municipal agencies, hospitals, residential care facilities, and schools, preschools, schools, colleges, they're generally subject to the Fair Labor Standards Act. But going back to the enterprise coverage and the individual coverage, an entity is going to be considered an enterprise under the Fair Labor Standards Act if it has more than $500,000 in annual business or sales revenue. Nonprofits are not covered unless they engage in ordinary commercial activities that meet the $500,000 threshold. What does that mean? Well, ordinary commercial activities are basically something that some other type of organization that is for profit would be involved in, okay? You have a gift shop, okay? In certain instances, if you're selling goods or services to the outside world, even if it's on a discount basis, okay? That's a commercial activity. So it's important, and nowadays, it doesn't take a lot to reach that $500 threshold, okay? A gift shop alone might turn that over. If you are engaged in ordinary commercial activities, the employees who are actually involved in those activities would be covered by the Fair Labor Standards Act. If somebody is purely involved in charitable activities, they don't have anything to do with the commercial side of the operations, you've got a good argument that they're not going to be covered by the Fair Labor Standards Act. Even if somebody's not covered by the enterprise coverage, there's a possibility that they're still covered by individual coverage. Okay? Individual coverage basically applies if somebody is engaged in interstate commerce. Now, we could spend a lot of time talking about interstate commerce. Nobody will be excited about that, but basically interstate commerce is whenever somebody has dealings across state lines. Okay? That could include taking, fundraising, or having telephone calls with somebody in a different state, right? Ordering goods, product from somebody in a different state, okay? Mailing. If somebody is involved in any way in this interstate communication, that's going to satisfy the individual coverage element, okay? And somebody's, on that basis, is going to be covered by the Fair Labor Standards Act. That said, and you can take a little bit of relief in this, the Department of Labor has said that they're not out targeting not-for-profits. That's really not what all these investigators are doing on a day-to-day basis, which not-for-profits can we pick on. Okay, what they've said is that if somebody's engaged in an insubstantial amount of interstate commerce, the Department of Labor is going to take the position that they're not covered under the Fair Labor Standards Act. That's by no means a bright line test, okay? What's a substantial amount of interstate commerce, okay? But it is something that, if you're in that position, it's good to keep in mind, maybe you can take advantage of. Okay, so going back to these proposed white-collar exemption regulations, this is kind of a tortured history to some extent. It goes back to March 2014 when President Obama made these observations about the growing inequality in America. At that time, he directed the United States Department of Labor to modernize and streamline the white-collar exemptions. It took over 2 years but the Department of Labor finally published their proposed rule earlier this summer. Anybody here read the proposed rule? Some people looked at it, so I give you credit. It was, it was fairly thick. Okay, it wasn't like a 5 or 6 page memo. We were talking 70, 80 pages of legalese. Okay, but for those of you that dove into it, good for you. All right. The proposed rule came out, and despite the length of it, it didn't do a whole heck of a lot other than change one variable that I'll talk about in a second. Okay. After the proposed rule came out, the kind of the rulemaking process is an administrative agency issues the rule, then the public has an opportunity to comment on it. And it was either a 60 or 90-day public comment period, but in this instance, they received about 250,000 comments from the public, which is an exceptional amount. So there were other people that went through the proposed rule and decided that they wanted the Department of Labor to hear their opinion about it. So the comment period closed in September, and we're just waiting. We're waiting to see when this proposed rule is going to take effect. Okay? What the Department of Labor is doing is assessing those comments, modifying to the extent necessary its proposed rule, and then finally a final rule will be issued. From everything that the Department of Labor has indicated, we should expect the final rule sometime late 2016. Okay? So we have a little bit of time, right? 6, 7, 8 months down the road. And then at some period of time after that, the final rule is going to take effect. The Department of Labor has indicated that they're going to give employers somewhere 60 to 90 days to comply with the final rule once it comes out. So keep that in mind as I talk about some of the specifics here. Okay? So why the change, right? Aside from the general notion that there's, the middle class is under attack, growing income inequality, President Obama stated at the time, overtime is a pretty simple idea. If you have to work more, you should get paid more. Okay? Now, in my view, President Obama is really looking at this kind of through one side, right? Because there's a lot of people that would say, geez, there's advantages to being an exempt employee. Okay? You don't have to worry about punching a clock. You can, if you have a doctor's appointment in the middle of the day, you can leave work. The idea is that you work as much as you need to get the job done. Yeah, in certain weeks it might be more than 40 hours, in certain weeks it might be less than 40 hours. But there's inherent flexibility in being an exempt employee that you don't have if you're a salaried employee. Okay? And some people really value that, right? But we're talking about this all from President Obama's perspective, from the Department of Labor's perspective, and their goal is to have as many people treated as non-exempt as possible, because that increases the number of people who are entitled to overtime for working more than 40 hours a week, and for those people, on average, their pay is going to increase. Okay. At the time, President Obama also said that the Department of Labor is to simplify the regulations to make them easier for both workers and businesses to understand it. Now, whenever I hear politicians say that they're directing an agency to go in and simplify any regulations, I have to laugh. Okay? The last time this happened with the Fair Labor Standards Act was back in 2004. The Department of Labor was tasked with revising, again, the white-collar exemption regulations to make compliance easier. And they did that. They went in, the Department of Labor revised the duties test substantially, okay? And the sort of thing that we got out of it was, for example, the change that it made to the test for administrative employees. Under the new rule that was designed to simplify the process, it requires that individuals, to be considered an administrative exempt employee, exercise independent judgment and discretion over matters of significance. Okay? Independent judgment, discretion, matters of significance, none of that is very clear, right? So for the last 12 years, employers have been struggling with how to apply the administrative employee exemption. Okay? So it didn't happen in 2004 when the Department of Labor went in to simplify things. People had their doubts as to whether or not it would simplify things this time around. Okay? And in fact, since 2004, there's been more Fair Labor Standards actions filed each year than the prior year. The frequency of Fair Labor Standards Act, class action and collective action claims continues to trend upwards. Overwhelming number of FLSA claims concern whether or not employees satisfy the duties test, right? There's 3 tests: the salary basis, the salary levels, the duties test. The duties test has always been where the fuzziness is. That's been always the test that's most difficult for employers to apply, for the Department of Labor itself to apply, for courts to apply, for employees to kind of know where they fit, right? All the standards are gray. So you have a big problem with the duties test, right? 2004, they tried to fix it. 10 years later, President Obama says, fix these white-collar exemption regulations. The duties tests are still a problem. And what happens? The Department of Labor goes in and they revise the salary levels test, right? Probably the only aspect of this that was really clear, right? The salary level, it's a dollar amount, okay? They didn't fix the duties test. In fact, they largely ignored the duties test, except for one little piece that I'll talk about for a second. So there was all this confusion applying these 3 standards, or the white-collar exemption standards, okay? It all centered around the duties test. That's what all the litigation was about. And the Department of Labor kind of punted, right, when it came time to issuing the new regulations. So if you're familiar at all with the changes, this is where the major change occurred, right? The salary level right now, and as it has been for many, many years, is to be an exempt employee, somebody has to earn $455 a week, okay? Just over $23,000 a year, okay? Everybody that's, operates in this type of law recognizes that that number is very, very low, okay? That's basically a part-time employee in some instances, all right? Especially when you're talking about, whether or not somebody should be exempt from overtime. So it was no surprise that they would go in and change this number, the salary level number. Everybody expected that, okay? What they did was they went in and more than doubled the number, okay? It's a pretty significant increase. So the proposed salary level is $970 a week, over $50,000 a year, okay? The highly compensated test that I made reference to went from $100,000 a year to over $122,000 a year. Again, a significant jump, okay? You might be aware that New York has its own standards. The current, as of the beginning of this year, the current salary level in New York is $656 a week, approximately. And, I'm sorry, that's what it was last year. This year, it's $675. So the proposed federal number goes far and above the New York number. Okay. So another change relating to the salary level is that the current, under the rules as they always have been, the salary level had been fixed. That's why it's been $455 for all these years. Under the Department of Labor's proposed regulations, that number is no longer going to be fixed. It's going to be pegged to one of 2 things. Either the 40th percentile of weekly earnings for full-time salaried workers, okay, or the consumer price index, all right? Either way, it's going to change on a year-to-year basis. That's going to make it difficult for employers when they're setting their budgets, okay, because that number is going to fluctuate. Well, usually it's going to increase. You're not necessarily going to know what it is until the Department of Labor publishes what the number should be, okay? So whereas before, employers could count on the old current salary, the salary level, you're not going to know on a year-to-year basis. A few other proposed changes, okay? Yes, go ahead.
Can I just point out for context that if the number of the 455 had actually changed by CPI or cost of living since it was established, it would have gotten up to that 50,000 that it currently is, or plus or minus pretty closely.
Yeah, you're right about that. And in a number of different regards, the federal government has gone back and kind of unwound some of these employment laws as though that's the way it always had been. So
I'm not saying it's good or bad. I'm just saying that
that's a good point to make.
That's the math.
Right. No, that's. I think people were still surprised that the jump would be that much without making any tweaks with the duties test. Okay. Another change that could have an impact, depending on whether or not this is adopted with the proposed rules. Okay. non-discretionary bonuses, which by the way, most bonuses that are paid to employees are non-discretionary bonuses. They, under the current rules, cannot be taken into account when you're calculating the salary level. Okay? Under the proposed rules, there's at least the question by the Department of Labor asking the public whether or not they think that non-discretionary bonuses should be taken into account. So if somebody's compensation is highly influenced by commissions, okay, or some other type of productivity bonus, attendance bonus, referral bonus, that sort of thing, basically some sort of incentive to the employees, under the current rule, none of that can be counted. Under the proposed rule, the Department of Labor's at least has that on the table. I think that would be a more accurate reflection of what people earn. I think it would make sense to take into account non-discretionary bonuses. Only time will tell whether or not that holds true. Okay, so what about the duties test? Right? This is where all the controversy has always been. This is where the fuzziness was. The Department of Labor stated in its proposed regulations that it considers the salary level to be the quote, initial bright line test for white collar exemptions. Okay? I don't necessarily know how they can say that when all the litigation is over the duties test. It never had been the initial bright line test in the past. Perhaps that was because it was so low, right? But this is what the Department of Labor is saying. And the idea is, as far as they explain it, okay, is that there's always a gray area, right? Under the current rule, you have a number of people who are clearly exempt because they clearly satisfy the duties test, whether you're talking administrative, executive, or professional, okay? And then there's people that are clearly not exempt. The question's always been kind of that low-level, mid-level manager. Where do they fall? And what the Department of Labor is saying is, when you push up that salary level, a lot of people in that gray area, they're going to not be above that salary level anymore. So they're going to fall into the non-exempt category, which as far as the Department of Labor is concerned, is where they probably should be anyways. Okay? The problem that I have with that, and that a lot of people have with that, is it really doesn't answer the question because that gray area is still going to exist. It's just kind of pushing it up a little bit. Maybe it's narrowing it a little bit, but it's still, there's going to be that band of employee, that band of usually mid-level manager, that employers just don't know where they should fall. So there's going to be ambiguity there. And does it make it easier for employers? It doesn't make it easier for employees. And in some respects, it doesn't make it easier for the Department of Labor, okay? So, no change to the duty test is announced in the proposed rule. But the Department of Labor did something that I think, anybody here from the Department of Labor? that I think was kind of slick, all right? When a governmental agency issues proposed regulations, you would expect them to say, okay, this is what we're proposing as far as these are the rules that everybody's going to follow, okay? What they did was they used the rulemaking process to ask questions. Certainly not a proposal, okay? And what they asked questions about weren't little tiny things around the edges. They asked questions about really significant things, like the duties test, okay? They asked the public to comment on what changes, if necessary, should be made to the duties test, right? Now that's the whole point, that they spent 2 years going through this rulemaking process, right, to decide what changes are appropriate. And at the end of 2 years, they say, we don't know, why don't you tell us? That, to me, isn't the way you legitimately go through the rulemaking process, okay? A lot of people are anticipating that what's going to end up happening is they're going to review some or all of the 250,000 comments that they received from the public, and the final rule is going to include all of these changes to the duties test that nobody really had an opportunity to comment on. Nobody really had the opportunity to consider how it would affect the working group. Okay, and there's going to be a lot of lawsuits because of that. So the issue is going to be in limbo that much longer because, again, kind of a slippery, slick move by the Department of Labor as far as I'm concerned. And there's two specific areas that the Department of Labor asked about with respect to the duties test. First, they asked whether or not the federal government should adopt what's referred to sometimes as a California-style rule, okay? And the California rule, there's a percentage used in the state of California. It's 50%. If an employee spends less than 50% of their time performing exempt duties, they are a non-exempt employee. California follows this bright line test. So if the employer is saying that somebody is an executive employee or an administrative employee, but more than 50% of that employee's time is spent doing non-exempt functions, okay? They're not directing anybody, they're not supervising, they're not hiring, they're not firing, okay? They might do that 49% of the time, but they're 51% of the time, they're not doing that. They're making the widgets. They're involved in the day-to-day production, okay? That person is not exempt in California. So that's a pretty significant change, because right now, the Department of Labor looks to see what somebody's primary duty is. If your primary duty is an executive, you hire, you fire, right? You lead people, you supervise them on a day-to-day basis. It doesn't matter if you happen to have other tasks. Your primary, the reason why you were hired, the reason why you have your title is to perform an exempt function. It really doesn't matter what the percentage is, okay? Now granted, the amount of time that somebody spends doing a function can influence whether or not the Department of Labor would truly consider that their primary duty. But there have been instances where, vast majority of the amount of time, somebody's time is spent doing exempt functions, and the courts have said, well, that might only be 20-25% of their time, but that's really important, and that person's exempt, even though they spend a lot more time doing non-exempt functions, okay? So that's a very dramatic change. As far as the other duties tests that the Department of Labor is considering or asking questions about, okay, it's the concurrent duty standard. And this only applies to executive employees, right? Under the current rule, an executive can do both executive functions and non-exempt functions simultaneously, all right? Think about somebody working at a restaurant, okay? They're managing a restaurant. They make all the hiring decisions. They make all the firing decisions. They're supervising people, okay? They're directing the workforce, but at the same time, they're running a cash register. They might be clearing tables. They might pitch in and do dishes, right? It's kind of an all hands on deck situation. The executive jumps in and, grabs an oar and paddles with everybody else because you've got to get to where you're going, right? The Department of Labor is saying, geez, should we do away with this concurrent duties test? Now, that's going to have a very dramatic impact on a lot of employers. A lot of employers where the executive might jump in and kind of help pull the load, right? Now, why is the Department of Labor doing that? Well, they're going after the McDonald's of the world, okay? They're going after the Walmarts of the world, right? Where they might have a managerial level employee who's considered an executive. But as far as the Department of Labor is concerned, they're not really making executive level decisions, okay? Because there's other layers of management above them, perhaps. Even though they might have a huge workforce, even though there might be multiple executives involved, okay? So, again, this would have a dramatic impact, and I think it's a little bit tricky that the Department of Labor, if they have their intention of modifying these rules, that they didn't put it right in their rulemaking procedure so people could prepare for it, right? So that's basically the proposed changes to the Fair Labor Standards Act. They're pretty significant, okay? So what can employers do? Right? Well, this is the opportunity for employers, for-profit, not-for-profit, it doesn't matter, to go back and kind of do a self-examination here, right? Self-audit. Review salary levels to see where your people are going to fall, right? Review the duty census, right? You can get a little bit of guidance, whether talking to legal counsel or going onto the Department of Labor's website to find out what different elements are important when you're talking about exempt employees, administrative employees, or professional employees, okay? Look at job descriptions. That's a great place to start when you're trying to decide whether or not somebody is appropriately classified. Another thing, look at evaluations. If you do annual evaluations for your employees, go back and see what sorts of duties you're actually commenting on, right? If the sort of duties that you're commenting on are not executive, administrative, or professional, well, there's a question as to whether or not, those, the duties that you are making note of, aren't really what the people are primarily involved in, okay? If your evaluations don't reflect your job description, or don't reflect your classification of the employee, you have to kind of do some soul searching to see whether or not you've properly classified these employees in the first place. Identify and evaluate part-time exempt employees. And what do I mean by that? Well, the $23,000 annual salary level was so low, relatively speaking, that a lot of employers were able to keep somebody in an exempt position, even though they might only be working 25, 30 hours a week. Okay? So that person, there's no part-time, full-time, the Department of Labor doesn't care. You've got to reach that salary level. Under the proposed rule, that salary level is $970 per week. Okay? We need to make sure that our employees are reaching that. If you do reclassify any of your employees, make sure that you go back and document why. Okay? That's important. Not only does it show that you're not making arbitrary decisions as far as your employee classifications, but the truth of the matter is, right now, when the law is in a little bit area of flux, this is a great time for employers to go back and say, hey, you know what? We looked at it, the Department of Labor issued these new rules, we wanted to make sure we were compliant with the new rules, and that's why we made the change. So I've got a lot of clients that have, and this is probably the most common thing that employers are doing, they have that mid-level manager who they've always treated as an exempt, but they always knew that they were in the gray area and they were taking a business risk. That person wasn't quite at the 5440. So rather than hike up that person's salary to make sure that they're safely exempt, but you're still not addressing the duties question, they just kept their compensation where it was, right? And reclassified them as non-exempt. Now that doesn't mean that this person has to be paid hourly, right? You can have a salaried non-exempt employee. What becomes difficult then is you've still got to make sure that that person's getting paid overtime, right? So they might have a base salary where they're earning X amount, right? But as soon as they work more than 40 hours a week, you've got to figure out what their overtime rate is. There's a number of different ways to do it. It could be as simple as trying to figure out what the hourly equivalent is by looking at that salary. Okay? So some people are kind of like, really? Yeah, you can have salaried, non-exempt employees. Right? Yeah, you have a question?
What is the gain in that? Because you described that you would be paying overtime over 40 hours, but I'm a little lost on what's the gain.
There's some business reasons. There's some, kind of feel-good reasons too. Some people like being considered salary, that there's a status associated with it. Okay? The business reason, I gotta be careful here, getting down too deep in the weeds, but there's ways that employers can lessen their overtime exposure. Okay, by treating somebody as a salaried employee with a fluctuating work week, for example, right? Let's see, how do I get into this without spending 10 minutes on it?
And you don't have to.
No, that's okay. But there's a number of different ways you can calculate what somebody's overtime is, right? You could take their hours and take their salary divided by the number of hours that they worked, okay? Another way is saying, look, we're going to pay you this salary. We don't care how many hours you work. You might work 30 hours or 45 hours. Well, okay, we care how many hours you work, but we're not going to adjust your salary based on how many hours you work, okay? So if you work 30 hours, you're going to get this amount. If you work 50 hours, you're going to get this amount, right? That hour, that salary is apportioned for all of those hours. So when you figure out the hourly equivalent, if they work 30 hours in a week, is higher than if they work 50 hours in a week. So when you're calculating time and a half for overtime purposes, if you're calculating that time and a half based on the hourly equivalent for 50 hours in a week, your overtime pay is actually lower than if you calculate it based on a lower number. Okay? Yes?
All right, so you're a salaried non-exempt employee, required to pay overtime for someone that works over 40 hours a week.
Yeah.
But you're basing their overtime hourly pay on they're working a 50-hour week.
Well,
Is that what you're saying?
It depends. I mean,
Okay.
if they're working a 50-hour week, you can, if you've set it up this particular way,
Okay.
base it on them working a 50-hour week. If they're working a 35-hour week, you can't divide their salary by 50.
Okay.
Okay?
Mhm.
So, like I said, we could spend a lot of time talking about that. I don't want to get too deep into it, but there are reasons why some employers will treat their non-exempt employees as salaried. Okay? And that's a decision that employers have to make, whether, if they're reclassifying somebody from exempt to non-exempt, how do we want to pay them? Some employers are simply saying, look, this is the amount that we're paying you. We're going to look at how many hours you work on average each week. We're going to figure out what your salary is. We're going to figure out how many overtime hours you're working, and basically do the math so it comes out at about the same. Knowing full well that if somebody does work more overtime hours, the employer is going to be on notice for that. Okay? Yes?
How does comp time work into that? Is that a possibility? Like
Yeah.
people overtime, comp time, 4 hours long?
Yeah, that's a good question, and I'm trying to think if the proposed regulations even address that. I don't know that they do.
So that means we can just do it.
I want to make sure you have a firmer answer than I'm prepared to give you.
I thought you couldn't do comp time in the private sector, it was only for government.
It is, and if you're talking, and you wouldn't be able to use comp time. I don't know whether you're public or private sector or any.
Nonprofit.
What's that?
Nonprofit.
Yeah, well, I mean, a lot of private sector are not private also, but if you are private, you can't use comp time. A lot of employers still do it for exempt employees to reward them for overtime, and there's nothing necessarily wrong with that. So you probably have to get in a little bit closer to see what you're doing in your organization, okay? All right, so back to the self-audit. Consider the benefits of attorney-client privilege, right? If you're doing a self-audit by yourself, there is nothing protected about that. If the Department of Labor came in and did an investigation, if they subpoenaed records, if you were in litigation and somebody, issued a document demand, your records relating to your internal audit they have to be revealed. They have to be disclosed, okay? If you somehow work an attorney into it, either they're the ones who's doing the audit, okay, well, that would provide basically complete protection for the most part. I mean, there's some exceptions to that, but it provides a lot of protection to your internal, decision making, okay? Or you kind of work an attorney in to give you some advice as you go. Again, to the extent there's communication there, those communications would be privileged. There's also other advantages. One, if you're relying on the advice of an attorney, even if the Department of Labor disagrees with you, you could always take advantage of, this wasn't a willful violation. You might still be on the hook for the penalty, but geez, my legal counsel was telling me to do this. It wasn't willful. There's increased penalties, increased exposure, increased statute of limitations for a willful penalty, for a willful violation. So again, benefits to that. Okay, rolling out the changes, right? Determine the timing of the reclassification decision. When are you going to do it? Like I said, now's a good time. Develop an action plan and employee communications. Employees are going to have questions, right? They're going to wonder if they're being reclassified. Why? They might wonder if you've been doing it wrong all along. And that's why, again, this is a good opportunity to say, no, we were doing it right. Department of Labor just changed the rules on us, right? Managers, supervisors, they might have questions. Their employee, the people that they supervise might come to them and say, what's going on here? And we want to make sure that our managers and supervisors either can address this specific point, or at least refer the employees to the people that can address those specific points. Okay, so it's important to educate your supervisors. Be prepared to answer employees' questions and address any complaints that they might have. Right, and you could be very proactive about this. Some employers have helped them draft letters to their employees explaining why they're being reclassified from exempt to non-exempt. explaining that they're not going to experience any decrease in pay, and in fact, they might get more pay if they work, more overtime than was calculated in the employer's numbers, okay? All right? If you do reclassify, or even if you don't reclassify, it's always a good idea to look back at your training and compliance, okay? Record-keeping requirements for non-exempt employees are more stringent than those for exempt employees. You've got to keep track of every single minute that employees are working, essentially. The Department of Labor, whether you're talking about the federal or the state, they're going to presume that the employer is keeping good records. If an employee comes in and says that they were working on average 50 hours a week, and the employer doesn't have the records to prove otherwise, the federal or state government is going to believe the employee, okay? The presumption is the employer keeps good records. If it doesn't keep good records, then, it suffers the consequences, right? So it makes it very challenging for employers that don't have great records to, respond to a DOL investigation. It's an uphill battle. So, also the Wage Theft Prevention Act, right? State law came out, 4 or 5 years ago, requires employers to give notice to employees at certain times as far as what their pay is, okay? When they're going to be paid, what their pay rate is, what their overtime rate is. It also requires that if you're classifying somebody as exempt, that you notify them of that, okay? Wage Theft Prevention Act forms are supposed to be filled out at the outset of employment, okay? There's supposed to be some communication whenever pay changes. If pay increases, it's sufficient to notify the employee through a pay stub. As long as the pay increase is reflected on the pay stub, you should be okay, right? If pay decreases, the employer has to issue another Wage Theft Prevention Act notice. So in this instance, when you're changing the manner in which an employee is paid, right? If you're reclassifying them from exempt to non-exempt, I would err on the side of caution and issue them a Wage Theft Prevention Act notice, okay? If you happen to be in the hospitality industry or have employees that are in the hospitality industry, right? There's additional requirements. I won't get into why, it's crazy. But basically, you also have to issue a Wage Theft Prevention Act notice whenever the employee's changes. It's a pay stub. The pay stub doesn't cut it, okay? Just because it's not, hard enough for employers. They make different rules depending on what industry you're in, right? It's important for employers to keep track of meal periods, right? Employees in New York, if they're working, you don't have to pay them for their meal period as long as it's 30 minutes, okay? Any break of 20 minutes or less has to be paid. But if you're not keeping track of when your employees are off on break, the Department of Labor can come in and say, we don't think you were giving your employees lunches. And you have to pay them for that time that they were taking lunches. And beware if you have an automatic deduction policy where you automatically deduct an hour or half an hour from employees' lunches. Because if an employee comes in and they say, I didn't get to take my full hour or my full half an hour, the Department of Labor is going to believe them, okay? That's a huge area for liability for employers. Also, for non-exempt employees, it's important to have restrictions on their work activities outside of normal work hours. If somebody goes home and says that they're doing work, they should be compensated for that if they're not exempt. That's hours worked, okay? A little bit less, it's not as much of a problem for exempt employees, right? And of course, the overtime that we had talked about. If you go through, you do this audit, you assess the positions and you're making a classification decision, if you're keeping the employees exempt, you have to make sure that you're going to satisfy the new salary level, that you're prepared to adjust it on an annual basis, okay? Be aware of pay compression problems, right? It's one thing for an employer to say, okay, you know what? This person was exempt, they were earning $40,000, we're going to bump them up to 51 to get them over that threshold, and it's not going to be a problem. We're prepared to do that. What happens to their supervisor who was earning 52 or 53, right? And they have a lot more experience, a lot more background, they're a lot more skilled than the person who's suddenly getting an $11,000, $12,000 bump. How are they going to feel? So that's something to take into account. Okay, and then as much as it's kind of murky, we don't know what the duties test is going to be. We've got to be prepared to satisfy whichever test ultimately comes out. If you're reclassifying somebody from exempt to non-exempt, be prepared, set the new pay rate, include the overtime, enforce record-keeping policies, take steps to avoid unauthorized overtime or off-the-clock work, and again, be prepared for morale problems because the status, right? All right, so that's it. White-collar exemptions. Any questions on that? Yes.
I just got a question as far as giving workers stipends. For example, where I work, we'll give a worker, a director, extra couple $1,000s a year for maintenance work, where he or she may spend a couple hours helping cleaning the building before it opens or after it closes,
And you're giving this to an exempt employee?
to a non-exempt employee.
A non-exempt employee,
Yes.
okay. You're giving them pay for work. That needs to be included in overtime. For one thing, the work that they're doing, those are hours worked, so they should be counted all along as to whether or not somebody's working more than 40 hours, okay? When, a lot of times employers will do it at the end of so if somebody's doing that and they're working more than 40 hours in a week, they should get overtime for that week, okay? They should be getting paid for each hour.
Overtime based on their actual salary?
Well, if this is a non-exempt employee, is it non-exempt, are they salary non-exempt?
Okay, what if they were an exempt employee?
They weren't exempt?
Yes.
They weren't exempt,
Yeah.
okay. You've got to go, so are they paid on the hourly basis or salary basis?
Salary,
Salaried non-exempt employee,
yes.
okay. And at the end of the year, you give them an amount, a stipend.
When we give them a stipend, if it's, say, a couple $1,000s, we get paid where we work twice a month, so it's just divided. So it's a couple thousand, whatever it comes out to, $90, $100 a check.
Okay, so each pay period, you give them a
Right,
portion of the
right.
stipend. You got to make sure, and this is where a lot of people slip up, that stipend is being calculated in their wages when you're calculating overtime. Okay, so if say that they earn, I don't know, $400 for that week, okay? And their overtime rate, say their hourly rate is $10. So they're earning for $10 or 40 hours, $400, and you give them a stipend at the end, okay? If they work, say, 45 hours, right? Time and a half of the $10, that's $15. So what is it, $65 if I get the math, or $75, right? So it's $475, but then you've got to include that stipend in. So the overtime rate wouldn't really be $15, even though their hourly rate is $10, if that makes sense. Their overtime rate would be their normal rate plus the stipend divided by how many hours they worked. So it confuses things, to answer your question. If it was an exempt employee, you could give an exempt employee some extra pay for doing extra stuff. The Department of Labor doesn't really care, unless it's to the point where that extra stuff is so significant that it makes them a non-exempt employee. That would be pretty extreme though. So, okay. Any other questions on the white-collar exemption regulations? Okay. All right. Independent contractor misclassification. This probably for the last 7, 8 years has been a very big deal on the federal and state level. Okay. Just this summer, the Department of Labor issued a new administrator's interpretation addressing what they consider this problematic trend of independent contractor misclassification, right? And the problems with misclassification is essentially somebody's not being treated as an employee, so the employer's not paying employment taxes, and the individual doesn't get all of the protections that an employee otherwise would: unemployment insurance, workers' comp, overtime if they're working more than 40 hours a week. Okay? Plus, because that employer is realizing all those economic benefits of treating somebody as an independent contractor, there's unfair competition. Okay? So the Department of Labor this summer comes out with their interpretation. They're saying most workers are employees under the Fair Labor Standards Act. That's not new ground. They've always taken that position, and most people would agree with that. Okay? The Department of Labor says that the scope of employment is very broad. And they began applying a new multi-factor test called the economic realities test to determine if a worker is an employee or an independent contractor. If you've ever kind of gotten into this issue, you might know that just about every single administrative agency have their own test, right? The IRS applies like a 20-factor test for this. The National Labor Relations Board, I believe, looks at 12 different factors. A lot of them are similar. The variables are similar. The New York Department of Labor has issued for different industries different tests. Construction industry, the New York State Department of Labor is really high on it. Okay. The U.S. Department of Labor's 6 tests, 5 or 6, it's on the next slide. What they've said though is no single factor is determinative. Okay. Not one is dispositive. They should not be mechanically applied. All right. And ultimately, the test should be applied liberally to provide expansive coverage of the Fair Labor Standards Act. So just to kind of quickly go through the economic reality test. Is work an integral part of an employer's business? Okay? So is whatever company's at issue, are they normally engaged in those activities? If they're engaged in those activities, you're going to have an uphill battle trying to explain that somebody from the outside who you bring in and you pay money to perform those activities is an independent contractor, right? They're doing what you do. Why aren't they your employee? Okay? Does the worker's opportunity for profit or loss depend on his or her managerial skill? In other words, are they taking business risks, right? If they do a good job, do they receive more economic benefit, right? If they work faster, if they work better, more efficiently, is their economic benefit going to be greater, right? If they could do the job twice as fast, they're still getting paid the same amount, okay? The flip side is if they do the job twice as slow, do they get not as much pay? Or the same amount of pay, but spread out over those hours, their profit is less. What is the worker's investment compared to the employer's? Who's buying the equipment? Who's buying the tools? Okay? Does the work performed require special business skills, judgment, and initiative? Are you bringing in a hot shop to do something that you normally don't do? They've got the expertise. Okay? I boil these questions whenever I deal with independent contractor issues, kind of down to how I run my household, right? If I bring an electrician in or a plumber in, they have the skill I don't have, okay? If he does the job twice as fast, he just earned twice as much an hour, okay? I don't have that expertise, I'm bringing somebody in to do that. Is the relationship permanent or indefinite? Well, hopefully it's short term, especially if you're talking about bringing in an electrician or a plumber, right? If it's an ongoing relationship, okay, it's going to be more difficult to show that this person's an independent contractor. We've seen this issue a lot with computer professionals. Somebody farms out their IT, or at least like certain aspects of their IT. But that person's been working for that company for 3-4 years. It's just one special project after the next, okay? That's the only company that they're doing work for. More likely than not, that person's an employee as opposed to an independent contractor. Right? How much control is exercised by the putative employer over the worker? Do you set their hours? Okay? Do you dictate when they take lunch, if they take lunch? Do you dictate how they go about performing their tasks? If so, it's more likely that you're an employer. Okay? So ultimately what this all boils down to, according to the Department of Labor, is the worker economically dependent on business, or is the worker in business for him or herself? Okay? That's kind of the guts of it all. Some actual realities about the Department of Labor's economic realities test. Well, as we've said, they want the test to be applied to provide expansive coverage. They're predisposed to find an employment relationship. Okay? So be aware, that's what the Department of Labor is kind of eyeballing, right? And they've already said, no single factor is determinative. The factors are not to be mechanically applied. So they get to apply the factors however they want. That's a great deal if you can get it, right? They can focus on certain factors in certain instances, and they can marginalize other factors in other instances. So it's a very difficult situation for employers if you want to try to identify somebody as an independent contractor. And there's a lot of back pay exposure, okay? So if you're using somebody from If you're calling somebody an independent contractor, if you're 1099ing them instead of issuing them a W-2 statement, okay? Be certain that you're doing it right. Because there is not only all the back taxes, the overtime, right? Because odds are, if you're considering them an independent contractor, you're not keeping track of their hours. They can come in and say that they worked as many hours as they want, and you can't prove them wrong. So there's a huge amount of exposure there, okay? All right, consider independence of contingent workers, okay? So if somebody's arguably an independent contractor, are they truly independent? Do they have a separate business? Do they do their own advertising? Do they have personal investment in their business, okay? Are they taking some business risks, right? Are they performing their business for others? Okay? Can they refuse your work if you offer it to them? If you tell an employee to do a task and they refuse, what's going to happen? Right? If you tell an independent contractor to do a task and they refuse because they've got another job lined up, well, they have the right to do that. Right? They're independent. Do they have their own insurance? Some employers, if they bring in independent contractors, they want to see proof of insurance. Okay? Also consider whether or not it's worthwhile to enter into an independent contractor agreement. It's not dispositive, okay? It's not controlling, but it helps, okay? All right, so any questions on independent contractors? All right, we're switching to the state. Yes?
Are there any guidelines based on field of enterprise? So for example, a performing organization, a nonprofit performing group that wants to pay its performers a modest stipend per year. Is there a requirement if you're an employee, if you're considered an employee, that you have to pay minimum wage then?
Actually, I might be able to sort of add a little context to this. There's been a lot of conversation, especially in the theater community, and the New York State Department of Labor has sort of looked at theaters across the state. Many of the actors and sometimes musicians, sometimes tech, are considered. Some theaters want to consider them independent contractors. If you consider them an employee, all the rehearsal time, all the time performing, so it's not just, oh, we're going to pay you to do a show, but it's, right. If we've got 5 weeks of rehearsal, if we've got, 5 weeks of show. So I think, is that sort of where we're going with this, or?
Kind of, yeah.
Yeah, and I haven't looked into that specific issue, how, where the New York State Department of Labor, for that matter, the federal, land on that. My guess is that ultimately, the more that they are exclusively doing work for one enterprise, the more likely it is that they would be an employee. And the more likely it is that as long as all the other Fair Labor Standards Act requirements are satisfied, right? We talked about it at the outset, the enterprise coverage or the individual coverage, okay? As long as those are all satisfied, they would be employees, okay? That's something that's very specific. I really need to look into whether or not a performer in that instance, because
somebody who has a full-time job as a school teacher or something and performs in this group.
Right, and that's what I was going to say. Is it a hobby? Is it a talent that they just exercise, or is it something that they're, actually making a living doing? And I don't know how the Department of Labor would land on that. Okay, I mean, you could say the same thing with athletics to a certain extent, like amateur athletics, right? I could see a similar sort of argument being made, although, are they doing it for fun, or are they doing it for work? And I'm sure that issue's come up and it's been a hot button issue. I just haven't had the opportunity to look into it to see how they land. So
you get back to us on that?
yeah, give me a card. I definitely.
Actually, if you let me know, we'll distribute it out. All of you registered for this, so we'll get the answer out to everyone.
Yeah, I would not be surprised at all if the Department of Labor has issued some sort of missive. I mean, on the one hand, everything that I've talked about today is look, we want to expand who's an employee, we want to make sure that people have all their rights. But, philosophically, they're kind of butting heads against, a segment of society that the Department of Labor normally wouldn't have in its target, right? And that's why, they've even for a long time said they're not going to, scrutinize individual coverage if somebody's spending a little bit of time doing interstate commerce, right? Because they're not out to pick on not-for-profit, the arts community, or anything like that. But there's not an outright exception either. So give me a card, and I'll circulate something, because I want to look at that too. Yeah.
Does this multi-factor test that we were talking about apply to the part-time versus independent contractor decision, or is there a different set of tests that apply for that, or no?
Part-time independent contractor? No, I mean, it's not.
Part-time employee versus independent contractor, same test?
Same test.
Okay.
They don't, I mean, that would influence how they look at the tests. If you're spending a smaller amount of time. But if you're spending a smaller amount of time doing what's clearly work for an employer, you're going to be considered an employee.
You shouldn't be setting hours for an independent contractor. So if you're saying, somebody's working 20 hours a week, then you wouldn't be dictating the hours for that person if it's an independent contractor.
Right. But if the project that you're bringing them in on just doesn't require a lot of time, that it's all could be relevant. So, okay. So and the state said yes.
One more question.
Yeah.
What about the title of someone that you hire and consider an independent contractor? What if you call them your, development director, for instance?
That would not be. That would not help you.
Okay.
Right. If they have a title, if they're on your website, you're promoting them as somebody that's in the fold.
But there are capital campaign consultants who could be an independent contractor.
Right.
So
But it's a consultant instead of director, for instance.
Right, and if the capital campaign consultant is doing the same thing for a lot of different people, you got a good argument. If they are yours and only yours, I'd be nervous. I'd want to look into it.
Right.
So, okay, all right, New York, right? Because they've been busy down in over in Albany too. Don't have a lot of time to spend going over this, the wage payment regulations. Basically, in November, a comment period closed. Okay, the New York State Department of Labor was asking the public to comment on certain changes that were made to the wage payment regulations. The gist of it is that it's permissible, or it currently is permissible, for employers to pay employees one of four ways: by cash, check, direct deposit, or payroll debit card. The proposed changes mainly deal with the payroll debit card. Okay, it's kind of new ground. Employers started doing it. The Department of Labor, it was kind of the Wild West for a little while. All right, the new rules are not that different from the rules that had always existed for direct deposit. You've got to get certain consents from the employees. You've got to provide certain notices to the employees. Okay, you've got to retain certain documents. Okay. Their consents, namely. It really is kind of a very technical regulation to make sure you can check off all the boxes. And if you do, then you can pay employees by direct deposit, by payroll debit card. Okay, this is still a proposal, although the proposed regulations are not that different from what the Department of Labor had been doing all along. Okay, as soon as employers kind of broke new ground and started paying by debit card, they kind of, on this, on an informal basis, issued kind of rules, guidance that employers have been adopting, and then they just kind of formalized some of that in their proposed regulations. The proposed regulations, they can't quite get it right because they issued them, and then people commented, and then the comment period closed, and then they assessed the comments, and they realized they didn't have, they didn't know exactly where they were going to go, so they reissued the proposed regulations. And that comment period is what most recently closed in November. So the best advice I can give on this is just get your hands on a copy of the proposed regulations and just, Google it and check through to make sure you're satisfying all the notice and the consent requirements. It really does, there's a lot of minutia there. There's got to be so many ATMs accessible to the employee. There can't be any fees charged at those ATMs, okay? The employee has to be able to withdraw every single cent. So you just got to kind of walk through the requirements. And then the last thing, again, yeah.
So does that saying specifically to do this, that the employee, what if the employee doesn't give consent? And they say, no, I want to pay it.
Yes,
So they can hold you then?
yes,
Okay.
yep. So they have the control over that. So it's kind of balancing the employees, their right to make sure that they get money that they can, or an instrument that they can easily turn over, versus the kind of the technological advances of these different ways of paying people. So,
And the same thing applies to direct deposit. In essence, they could say, no, I don't want that.
That's-
You can't make it.
that's correct.
Look at that.
So, minimum wage, okay? Increase to $9 in New York as of December 31. You may know the fast food industry, right? The fight for 15, big deal over the last couple of years. Well, New York has agreed. New York, has kind of established a schedule for workers in the fast food industry. I realize that's not what we're dealing with here. There is a $15 minimum wage on the books. It kind of graduates up to that, to the point where in upstate New York, July 2021 is where you hit the $15. In New York City, it's January 2019. It's a little bit faster schedule. Okay, the current fast food industry up here in upstate New York is $9.75. But as soon as, it's funny, if you go back a couple of years, Governor Cuomo was saying there's no way that New York employers can afford a $15 minimum wage, fast food industry or not. It's too far of a hike. I don't follow this debate too too closely. But from everything I've read, the people have said at $12 or $12.50 is where the increase in the minimum wage starts having the negative effect that a lot of employers say it's going to have. Okay, but up until $12 or $12.50, there really isn't a negative effect. Well, they blew by that. Okay, and they did it in fast food, and they're going to do it in other industries. So, you expect to see within the next few years something closer to whether they do it on a schedule or whether they just hit the employers over the head really quickly with the increases. Expect a big increase in the minimum wage. With that, that's it. Yes?
I had a question relative to independent contractor. I'm familiar with a term called sole source vendor. For example, you want to hire a photographer that comes in to do a service for you and they're on call. They're not officially an employee of yours, but you pay them for a service.
And are they doing it for you and only you? Or are they
Well,
marketing themselves to other people?
Other people.
Yeah, if they're marketing themselves to other people and you're not normally involved in that business, you're just bringing in a specialist to do a
So
project.
this could be an IT person or,
Yeah, and there's not a problem inherently with an IT person either, okay? The problem is if you look at it objectively, and that photographer that you're bringing in is essentially a staff photographer for you, right? You're the only person that they do work for. You have control over when they work. I'd be nervous about treating them as an independent contractor. Now, if they've got a card, if they've got on the side of their van, they've got Sally's Photography and they're in the phone, right? That's all. I mean, I don't have a problem with that. Again, no one single factor is going to answer it, but all those things put together, right?
but it's treating them as a vendor, not as an employee. So it's like a business. So you pay the business
Right.
and then they pay the employee stuff on their end to the tax department.
Yeah.
Wages and stuff like that.
You can't get around the independent contractor issue just by issuing a 1099 to another business. That alone, okay? Because, Rick's computer service, IT services, okay? However, Rick sets up a business The 1099 check goes to his business. Rick's the only one reaping the benefits from that. But if he's spending all of his time, working time, camped out at your workplace, and he has for years, he's your employee.
So it's a limited employee, in other words.
I wouldn't call it a limited employee. They'd call it, they're either an independent contractor or they're an employee. A vendor, if they're truly a vendor, they're an independent contractor, okay? But the closer you get to that line of whether you control them or whether they have enough discretion over their own business, you know, it's not a bright line test, unfortunately. That's why all these agencies have all these variables that they look at, okay? So it's a little bit of gut check time, you know, and companies take risks all the time, okay? And you know, they decide that somebody's an independent contractor versus an employee, but just be aware that it's a risk, you know? The further you can kind of isolate your business from what they're doing, the better off you're going to be. Yes?
We have a consultant that is hired as an independent contractor. But the other work that he does is as a salaried employee.
For you?
No, for
Okay.
another company. And we're the only independent contractor work that he does. And the other one is salaried. Do you think that muddies the line for us?
There are so many different factors that go into it. I mean, it would be tough to answer just with those couple. I mean, there'd be no reason why that person just could be your part-time employee, right? Assuming everything else kind of tips the scales in that, you know, in that direction. So, and I'd want to look at it more. It makes me a little bit nervous that this person's not doing work for anybody else. Like, are they advertising their business to anybody else? Okay, or are they just, you know, they got to deal with you and they're happy getting a check that doesn't have employment taxes taken out, right? So it's not as huge of a risk because you're not talking about overtime, but there's still some compliance issues there. The big risk is when you're talking about overtime, because that's just, it'd be very expensive fixing that. Yes.
Salary non-exempt. So let's just assume the threshold goes to 5440, we've got a $40,000 a year employee.
Yeah.
We can say that you have a salary, and at 40 hours, we're going to pay you time and a half.
Yeah.
Now,
The 50, but if you're talking salary non-exempt,
yes.
the 5440 is not relevant. It's only relevant.
Window, that's right.
It's only relevant if you're talking about exemptions.
So you could say somebody's salary at 40, right? And they're still not exempt because they're under the threshold.
Clearly.
Right, so now, for time off that they get, can we base that on a 35-hour work week? Currently, we have supervisors working 35-hour work weeks. They're going to clearly fall under this threshold. They're going to be below the 5440. And they often work overtime. We've been getting away with them working 45, 50 hours a week, in some weeks 35 hours or 30 hours.
So the true balance of the attraction to the debt.
Yeah. So, but there's a morale issue because I've stated, well, once you're going to be non-exempt, because currently they're exempt, because they're above the 24,000 threshold, that we're going to change your hourly rate, because now we're going to put you on a 40-hour work week, which is going to create a morale issue. You
Right.
follow?
Yeah, I think I follow.
So if we go to the salary non-exempt, then when they have time off, we can pay them the 35-hour rate, and we can keep their hourly rate the same. So in other words, I just want to pay them until they get 40 hours with their current salary is, and then pay them time and a half at the hourly rate that they currently have.
Not sure I follow you. Let me say it this way. All right, their salary, their hours fluctuate between 35 and 40 hours.
45.
45 hours, or 50, whatever.
They work
Say
with-
35 and 45, okay? You pay them $40,000 no matter where they land there, okay? That is okay. If they work 35 hours, they get $40,000. If they work 45 hours, they get $40,000. But for hours 41 through 45, you need to calculate the overtime. And so they're really going to get 40,000 plus the overtime for those 5 hours. And if they work 50 hours, that overtime rate is going to compress a little bit, okay? Because you're dividing 40 hours, or $40,000, or the weekly equivalent of that, by 60 hours, as opposed to 50 hours, as opposed to 45 hours, okay?
Before we take another question, I just want to jump out for a second. On the non-legal side of things, just before we start losing too many folks, just wanted to sort of mention to people that, you know, a couple of big takeaways, especially if you're an executive director or you're making some of these decisions. First off, there are a couple of rules that took effect as of the beginning of this year. Not ones that make huge changes on most people's budgets, but there are some differences in the New York State level of exemption and the minimum wage that you need to be looking at now. But the reason we chose to do the forum this early in the year, even though a number of those changes aren't going to be coming for several months, is because they are going to lead to some very reflective decisions in our organizations. For instance, you know, from an ED standpoint, taking a look at your employee, and, you know, to some extent it's a calculated risk. If I were to leave that person where they are, salary-wise, or, you know, and they became an hourly employee, well, how much overtime might they probably get, looking at what they do for me now? Is it better to just pay that overtime? Or is it better to start planning now that in next year's budget, we need to increase the salary and keep them exempt? So purely from that standpoint, it's a question of, am I willing to go the route of keeping the base money where it is and being ready to put a pool of overtime money into my budget? Or is it a better deal to increase to the level of keeping them exempt? And then, of course, there's the duties test and everything else, but just strictly from a budgeting standpoint, which is going to be the better deal? And then, of course, considering all of the human factors in you know, how my employee is going to react to that and those sorts of things. But the idea is that, you know, probably the most important thing is, while we have time to plan, as you mentioned, when it actually takes effect, there's a likelihood it's going to take effect rather quickly. And, you know, especially the exempt rule. And so once we get to that point, we've got to be ready for it. So those are all things to be factoring in now. And then the last thing I'll say, which has absolutely nothing to do with the law or any of these other things, is, you know, one of the issues that we deal with, both locally, statewide, and even nationally to some extent, is the viability of our cultural sector in terms of people's ability to make a living within it. And that's sort of the other piece of this equation, that, you know, to some extent, on a purely budgetary level, we can just say, well, what's the most affordable option for us as employers? But I think there's also the option of, you know, if you saw Colin Dubkowski's argument, or article rather, about people leaving the area because they can't make a living in the arts and they have to go to other cities to make a living in the arts. There's also that factor too, that if we've got talented people working within the cultural sector, what do we need to do to actually keep them working within the cultural sector? So now we can go back to the actual legal parts of it, but, you know, that whole idea of living wage and employing people who want to be working in the cultural sector, is another big thing that we have to grapple with.
Yeah. And I like talking about this sort of stuff, so I will be around, actually. So, I mean, if you want to kind of address questions in front of the group, or if you want to just talk a little bit afterwards, or I can give you my card and we can touch base that way, however you want to do it. So, I mean, does anybody here have any other questions they want to raise in front of the group?
Is there an opportunity to get your PowerPoint?
Yeah.
Yeah, we'll put it up on the ASI site.
Oh, wonderful,
Yep.
thank you.
And also, we've recorded this session, so same thing.
In case you can't fall asleep, you can just call it. Right?
Yours is not the driest one we have. We did a whole series on nonprofit revitalization.
Yes.
I have a quick question. We have several exempt employees who fall under the new threshold.
who currently we don't take timesheets from. So if we keep them salaried and move to non-exempt, we have to fill out a timesheet.
Yes, because you're gonna have to be able to prove exactly when they hit 40 hours. Okay, so their start time, their meal times, their end time. You will need that. And, we've talked a lot about the salary non-exempt, and for different reasons that might be attractive. There are some headaches. There are headaches associated with that. So,
Having not to fill out a timesheet is a really big benefit.
yeah, but that obligation will still exist. And the biggest headache, of course, is doing the math every week to figure out what their overtime rate should be. Yes.
Okay, so we have people that work for us that have, the one person has two distinct skill sets. One is a skill set as an artist. We pay them for that skill set as an independent contractor. And the second skill set is sort of as an administrative person. So we pay them as sort of an hourly employee. Are we in like kind of a very murky place with that?
Yeah. When you say administrative employee, okay, like.
For the record, this is Donna Fernandez from the Buffalo Zoo.
Wow.
Uh-oh. No, nothing to do with the zoo.
No, I'm just saying that since we're all being recorded.
Oh, okay. Oh.
Is the tape still running?
Yeah, we can shut it off. I mean, it might be a little too late, but other than that.
Right. Yeah, if you were to call me and ask me that question, I would first want to try to pinpoint whether or not those administrative responsibilities make that person administrative exempt. Okay, are they exercising, discretion, business judgment on matters of significance, or are they just performing a clerical job?
Okay.
Right. If you talk about the artistic, I mean, there's two types of professional exemptions, right? There's the learned professional, and then there's the artistic, creative exemption. Okay. So I want to know what sorts of things he or she is doing, and whether or not perhaps that person would fall under the creative exemption. Okay.
But there's two different salary rates, though.
Yeah, well,
There's
that's
like
the thing. You only have one primary duty, okay?
Oh,
At
as an
least under the
employee.
current rule. What's that?
As an employee, you only have one primary duty.
Right. So my point is that even if this person who you're treating as an independent contractor for the artsy side of her job, right, is perhaps better classified as an employee for that aspect of her job, is that her primary duty? Okay? And if so, can we treat that person as a professional exempt employee, notwithstanding the fact that she might also have some clerical administrative responsibilities that wouldn't be exempt? So, is it murky? Hugely. Yeah.
Okay.
Yeah.
Thank you.
So, yeah, I would have hoped that there was a lot more clarity after the Department of Labor spent 2 years revising the regulations. There isn't, though. It's a practical matter. Anything else? Okay, like I said, I will be around. Thank you very much.
Thank you.